Holy smokers, XRP holders are no joke. BlackRock's CEO just stunned everyone once more. The Fed only stated that it will do what is required. The market is responding favorably to this. We're going to discuss all the most recent in the best news. We'll discuss the inflation figures that arrived far better than anticipated. Is that positive? Is that good? All I want from you is a lovely smile to send out those positive vibes. Smish, lousy smash that like button Friday, Freaky Friday, like sir, free. Now let's start. XRP is now sitting at $2.05 up 4.5% on the day. Got Bitcoin up nearly 6%. Ethereum up about 4%. The whole crypto market up about 5%, 4.8%. It's not only that, the S&P 500 is rising 1.7%. That means the cryptocurrency market is performing somewhat better. Understand that the stock market still has some anxiety. The fix is down today, as you can see. It began with a significant drop down and has since recovered somewhat, now falling down once more. Given 2 more hours for trading on the stock market, it will be fascinating to see how it plays out following this wild week. A lot of mischief can follow a very erratic week like this one. Indeed, the reality that we are up 4 or 5%. Having witnessed events on Friday where 2 hours before close, things appear fantastic, I will be cautious. Then all of a sudden at close we are in the negative. Let's wait and see then what will happen with XRP. But once more, if we consider where XRP was on the 7th of April at 162, XRP has thus increased nearly 27% since then. Certainly, if we look back to January 20th, the beginning, we were far higher. But still, if we zoom into just this week, you could have made 27% if you bought the dip again. That was a very short period of time, and it was in a strange time frame. It will therefore be quite fascinating to observe how the market develops here and how it heads into the weekend. Following a hectic week, we did begin with positive news arriving. The PPI, the producer inflation figures, were really nearly 0.5% lower. That means 0.6% less than anticipated. Once more, this was 0.4 month-over-month against 0.2 projected. This is quite fascinating since we might observe how it influences the CPI figures going forward as well as the PC figures. Well, this is quite fascinating. Wow. Correct. Well, both PPI and CPI inflation are coming down, When we examine the Fed, we'll reach the statement they made just about a day and a half ago, at around 40-something% likelihood they would lower interest rates. About 60% of them, that 40% that they would do nothing, and 60% that they would cut interest rates in 3 weeks. We are now 80% inaction and 20% reduction. The story changed in about 48 hours owing to the statistics that emerged. Now we are in a far more probable scenario that they will not lower interest rates. Mostly the bond market is what now influences the markets. And you can observe, now no Trump's top economic concern for weeks. President Trump claimed no tariff postponement. Stocks even lost $12 trillion in value. The bond market then collapsed and a 90-day tariff halt was put into effect 12 hours later. Continue to monitor bonds. This is fascinating. Though it appears they are looking at the bond market, we have heard comments from the White House claiming they are not looking at the stock market. That will therefore be something we have to monitor. There has also been some reporting on China's reaction to the tariffs and claims that they would not react to any further tariff increases. However, this appears to be a misreading of what they wrote. Claims China's reaction to US tariff is being misreported. Many stories say China's thinking about giving up since they claimed if the US reacts they will not raise tariff. But China really claimed this. Will they disregard additional tariff hikes since at the present tariff rates, the Chinese market already finds it impossible to welcome UN imports? China also reiterated their will to fight to the end. Essentially, they'll claim, hey, we don't really need to raise tariffs anymore since no one will be conducting business with the US, therefore, it is irrelevant. That's quite passive-aggressive. Correct. You are so worthless that I don't even have to, hear your viewpoint. Something similar. Since your viewpoint is irrelevant. Something similar to that. So that's quite fascinating to observe how that develops. We also received news from Blackrock CEO Larry Fink, who believes there is a long-term buying opportunity even though the economy is slowing and the markets could fall 20%. Once more, when you hear comments like this from major players, correct. Those with many assets. Some hidden causes could be this. One possibility is that they could hold a short market position. Another possibility is that they want to be a little bit more cautious since they do see a turmoil ahead. Long term, he claims, if the markets fall by 20%, he views it as a buying opportunity. Should the market decline, he will be dollar cost averaging. Many comments I've read claim the market is crashing and we're down huge and yada yada yada. But mostly, if you simply zoom back and you see, for instance, well, Bitcoin was at these levels back in November 8th, correct? I mean really, sorry, not November 8th, November 13th. XRP was at these same levels and December 3rd. That meant we just went back a few months. Indeed, we were much higher, and also, looking at the stock market, I mean, sure, my portfolio was much larger, but this is roughly where I was back in January. No, we're up since then. We were back where we were in August. August I was freaking out a little bit, but it went up and came back and created new all-time highs. Doesn't imply this same situation will occur. The market didn't crash, correct? My portfolio is still much higher, where I was in 2022, but yes, I'm not at the top. It's all up to how long you're investing and what are you doing when these drop-offs occur. What do you see? That is therefore extremely crucial to keep in mind. Once more, I won't advise you to buy, to sell, or to hold, since I lack knowledge of your plan, time frame, and risk ratio. And obviously, that's why I'll never advise you to purchase, to sell, or to hold. And of course, not financial advice. Always do your due diligence before making an investment decision, but it will be fascinating. The market will still bounce back from this, in my opinion. Though I'm day trading things, I'm still a very long-term holder, bullish position, which is fine. You can long-term invest, and you can day trade. In my view, those are completely different situations. Once more, this is only my viewpoint. You do what is best for you. Not everyone day trades. Others do not swing trade. Some people just put money into S&P 500 index funds. Every single individual has a unique situation they must, be in. Once more, we have to be on the lookout for the 10-year note yield rising another 20 basis points and the Fed turning. What is the Fed now considering? Essentially, a senior Fed official claims the Federal Reserve is prepared to assist in stabilizing the market should it be required. Therefore, the major issue will be this. What is required? Is required, going above 5% on the 10-year. That would be insane. Mortgages are going to be crazy, particularly if the 30-year keeps rising. Then why would individuals, it's not going to be a good situation, but when did they intervene? What constitutes an extreme situation? Does the market have to fall for that to take place? Like they haven't really provided a guideline to what would have to occur for them to intervene. You see folks like Jim Cramer claiming that if interest rates drop, the market will explode. Correct. You have therefore a fascinating circumstance. Jim Cramer has been both right and wrong, sometimes right, sometimes wrong. Especially if you make a lot of forecasts and there's the opposite Cramer and all that, it's quite difficult to be correct every single time. But it stands to reason that if interest rates are lower, then there is more likelihood. Should they begin quantitative tightening and quantitative easing, and the M2 continues to guide the markets, all the anxiety the markets would return, once all this kind of calms down somewhat. Doesn't imply that will occur again. We might have a bull trap or a bear trap here and experience a bounce followed by a sell-off. Anything can happen, and you have to be ready for all of this, but it will be fascinating to see if they do step in. You all